All right, YouTube, Mighty Fine back for another week of weekly price action analysis. Not a whole lot to update this week because not a whole lot happened last week as expected, as I was talking about Fed and FOMC, as well as the geopolitical issues in Ukraine and Russia played into a lot of price action last week. We did see some really big pushes, but overall not a ton of development in terms of the overall trend. Before we dive into each of these pairs, make sure that you give this video a like, subscribe if you haven't already, so more people can get access to this free tool so they can continue to learn. Everybody can win. All right, right into it. So this week we're going to look at the normal pairs that we usually do. I'm adding in gold and Nasdaq as well, as per requested on my Instagram. I put a little poll up and asked people what they wanted to see, and pretty much everybody said gold and Nasdaq, aside from a few little oddball requests. So those are in here. We're going to look at the dollar first, and I'm leaving a lot of the analysis that I had last week onto this week because it's still relevant. Nothing has significantly changed. What I can see here is that we have this daily demand that broke us out of that consolidation. This last week, we pulled back against that for about 4 days, and we're starting to see some demand come in again. This is still relevant. This demand is still the one that gave us our last push here out of that little consolidation bit. And overall, we are trending upwards. So if we see price action stay above this red daily demand zone right here, if we see price break above the current daily supply, we will start to trend upwards again and retest the high time frame trend highs, or the weekly supply box. I have the green one up top. So above this daily supply, it's going up. Below daily demand, it's likely to come back further, and that's when we get into our weekly demand level down here. Again, this is the trend higher low to higher high. So as long as price can stay above at maximum this green level, these zones and zones down here, then we're still sitting bullish. Anything below that, the overall trend may be changing and we need to readjust our bias. So for now, long on the dollar, but we need to play it smartly. Price may transition out of this area. That would be great. We would need to see a break above daily supply. Then we're looking for new breaks and retests, creating flow to the upside to come up and retest that high time frame trend high. Pretty simple. So we're going to move on to AUDUSD. This was our current leg, our last expansion to the upside. As you can see, we haven't broken that demand and we haven't created new highs. So it's still relevant, right? Price came back down, found a little bit of demand, some new buy orders. Price tried to come back and push up into this daily supply, where in the last 2 days of the week, we start to see some rejection. Sellers are stepping in, but not a ton of volume and certainly not enough to switch this flow. So it would seem as though we are still sort of in a retracement against this weekly leg in some fashion. Not a lot of volume, right? Buyers aren't really switching that trend up as of yet. And on daily and the H4, we can see it's just kind of putzing around here. This was our zones that we had last week. Price immediately broke down, failed to follow through, and then pulled back up into that daily zone. You can see that when we came up into this daily supply zone, sellers stepped in a pretty big way here on Friday. So what I'm interested in as we start the week is, do we see a new bearish flow coming out of this region here? If so, it might look something like this, a continued push lower and lower, creating new lower highs and lower lows, where we'll then need to come into this area of demand first and then retest that daily demand zone. This is the really major break or bounce, excuse me. So if we see something like that, if we see, a new lower high into a new lower low, I may look for this second test over here to continue to fade this down into that daily demand if the dollar opens up the week strong. Now, again, just like last week, there's still going to be some considerations, particularly Ukraine and Russia and the conflict going over there, because that seems to be driving a lot of safe haven volatility, safe haven currency volatility, including gold, yen, the dollar. Keep that in mind and watch how the dollar is performing as we open up into the week. But I do like the idea of a further fade to the downside on this into that daily demand, or that current, high time frame trend leg demand down here. If instead we see price break above this daily supply zone, if price were to just kind of continue to move sideways, get some more orders, and then trend on up higher, you can expect price to continue to go up into that weekly supply zone that we had up top here for a full retest of that overall trend leg. So then you have another break or bounce scenario here. Same thing as last week, indicated by these directional arrows. Pretty simple. Pound it remained in consolidation range. It cracked below the the lows of the previous range here, but failure to follow through, not enough orders. Now we can see prices kind of trying to push back up into that, hasn't broken into new highs. I'm still going to stay away from this. That's just my choice. I don't like to play in ranging markets like that. You can have fun with it. Some people like to. I personally don't. We have another flow switch here as well at the end of the week, and we're just kind of stuck up in this range. So maybe you could fade this back into the bottom of the range here. Anything above this sort of 136.445 region, it starts to look more long. Anything below this, it starts to look more bearish, but you need to see a good closure, an H4 or daily closure above or below this consolidation range before I will start to consider things. GBPJPY, I left on the little, if then arrows that I created for you guys last week. I said it's likely that price is going to come back up here and just move sideways and then start to come down again. As you can see, we're sort of in that move sideways period of this whole thing now, and it looks like we're starting to come down a little bit. So I am keeping my eye on that. If we break below this daily demand, I have an arrow here, then we're looking for a break or bounce on this H4 demand, or the overall leg that I have highlighted in the gray box here. I think that this is the last clear indication of who's in control out of this weekly supply zone. We are seeing a rejection here, quite a bit of good volume. Price comes back up, taps in, gets some more orders, starts to move down. So if price can move below this H1, H4 demand that I have marked out here, then I may look for a retest relative to that break and a push further down into this H4 demand around 155.308. If instead price starts pushing up, I got nothing to do until it breaks above this 158.215 roughly zone here, where I would then look for a break and retest to the upside. So got to kind of just hold and sit tight on this one for me this week. I am watching it. I do think that we're just looking for intra-week or intraday flow continuation trades. And if I see a break of this demand, for example, I may start to consider a short here into this demand zone or lower. Next, we have EURUSD. This is another one that was really nice, really quite nice this week. It played into my strategy and my approach very, very, very well. We know that this was our overall push to the upside here. We anticipated that we were going to push down, maybe grab some more orders, and then start to push down again. It's exactly what happened as we look at the H4 chart this week. Price came down, tapped into my zone where I said that we would probably find some demand. Price came right back up, tapped into the supply that I highlighted for you guys, and is now transitioning to the downside. So you could look for a flow continuation trade, based on this H4 supply that you have right here. You might see something, that looks like, for example, price could open the week up and go like this and then pull back relative to that. And then you're looking for a new trade to the downside. You're looking for it to trade into this known supply or lower. Anything below that, you can hold your trade for quite a while. Then it's going to move back down into this daily zone here around 1.114. If, on the other hand, we break above that H4 supply, I'm not going to do anything. I think that you have a lot of selling pressure here, and I wouldn't have a long bias until you got above that H4 supply there. And even then, it's a pretty short time horizon, pretty short window of a trade up into that next daily supply up top. However, you could have a long trade bias if you got above that H4 supply. So keep that in mind. I would watch this. I would look for flow continuations to the downside. I'm assuming the dollar is going to open up strongly this week. I think that the Russia-Ukraine conflict is not nearly over, and I think the dollar will continue to act as a safe haven, especially if the stock market continues to push downwards. Keep that in mind as well. So EURJPY into our last FX pair for the week. This was our big leg to the upside. We had this big weekly push here, right? And what we can see is as price came into that level of supply, we had that daily break of flow that I highlighted for you guys. We pulled back and we got a nice 2 or 3 day trade opportunity to the downside. So really, really nice call out from last week. As we start to look at some of the details, we can see that price just came into a previous level of supply, grabbed some more orders, and then started a transition. We broke this demand here. We came back and retested. There was a fantastic opportunity here on the 16th to take some shorts to the downside, and then another opportunity here on the 17th into the 18th to close out the week in that bearish push. I am anticipating that we will continue to make that bearish attempt. As long as we can get below these lows of this demand here, I think it has room to extend all the way down into the 129 or mid to low 128 region. So do keep that in mind. As of right now, this would be your daily supply right here, the area that you need to see price stay below to maintain this bearish attempt at an expansion to the downside. There you go. And I'll drop a line on there for you as well. Okay, so daily demand sitting right there. And I think overall you need to see price break past these lows here. I'm going to call that our flow low to the downside. So push below this and then even a retest relative to these last 2 or 3 days would be a really good opportunity in my mind. As of right now, you're just kind of waiting to see what happens at this level of demand here. So I think if you saw something, for example, either like this, a pullback here, transition, then you could look for a push into this or lower. Or if you saw something like the week open up bearish, then a retest relative to this, or this whole move in general, a transition on the intraday scale, and then a push into new lows towards these areas down here. So again, short bias on EJ. I think it's been pretty clean lately. I will be paying attention to EJ this week as well. Now we're going to head into gold, which, as I talked about last week, it was just super, super bullish. And that worked out pretty damn well, right? Price pushed up past these weekly highs, got a few more orders on an intraday basis, and then just exploded to the upside. Huge, huge, huge moves. You're looking for the same thing. You want to see a valid pullback. I have an H1 demand that I have marked out. If price breaks below this, I know my pullback has started. I'm waiting for a break of something like this level to show me that I'm getting a pullback. Then I look for an area where I might expect new orders to come in and an extension to the upside. I have no short bias on this. I'm not taking counter trend trades. It's long on gold because it is a safe haven in times of conflict. So we're just waiting for a pullback, maybe some profit taking, new orders to come in, and we can catch the lows of the week into new highs of the week. Nasdaq is a high risk asset class. So when there's conflict, for example, or if the dollar gets really, really strong, we're going to see money flow out of the stock market. And that's what we saw all last week. We saw this big pressure to the downside. And I think moving into this next week, we want to watch this leg between our two green weekly zones, weekly supply and weekly demand, that I have marked out here. As of right now, we can see that our day-to-day basis is pushing downwards. We are trending downwards. We have a pretty clear daily supply here, and we have a nice break or bounce directional bias situation. Overall, we are moving down, like I said right now. I wouldn't look to take a short into this level of strong demand simply because it's the stock market, it's the equity, US domestic equities, and generally they do like to move up. However, they are trending down. So if we see something like this blue line play out, a break of the current daily demand, a break below the weekly demand zone, then we could look for a retest relative to that and look for further shorts. If, on the other hand, we see price break above daily supply, we look for a break and retest to the upside up into this 15,142 region, or the last intra-week major supply that happened up top. It's very, very, very simple. I think that this daily supply level that I have marked out here is a good range to trade within as we come into the week. Your last major level of supply was here around 14278.6. And then I think you start to see a lot more supply up top around 14591, 9293 roughly. So do keep that in mind. I'm looking for a break under this weekly demand to show me that sellers are taking control, then a new order load up and continued shorts to the downside. Or a break of the daily supply, break and retest, continuation up into this mid to low 1500s, 15,000s region up top. And that's it for the week. Short and simple. Like I said, not a lot has changed or needs to be updated. We're kind of just holding tight. We have a couple of weeks until we have big Fed interest rate decisions that's going to drive a lot more market volatility. Hopefully this week we have some smooth trending price action as buyers and sellers make transactions into the end of the month. We can get a few trades in, but play smart, play safe. There's a lot going on right now, and there's a million days left in your life to make trades. You don't have to make every single trade every single day or even this week. So if you don't see anything that you like, it's okay to be risk averse this week, right? We have some news events. We have a lot of geopolitical issues that are definitely making the markets jump around. So what I'm trying to get at here is play smart, right? Wait for confirmations, wait for high time frame ideas to play out, and then act upon those. If you want to learn more about how to read those kind of things or how I target certain areas and get double and triple digit risk rewards, how I know when to enter, how I manage my trades, how I pick out my levels, if you want to join me for my live trading sessions 3 to 5 days a week, or even if you want some one-on-one coaching, I offer all of those things over at my website. The link is below this video, or go to mightyfinefx.com. Until next week, Mighty Fine out, trade smart, trade safe.